Hey guys, what's up? Super awesome to have you guys back on the channel. I'm Tremaine, and in today's video guys, we're going to be going over top-down analysis. Now, not only will we be going into how we use top-down analysis, but we're going to go into why we use top-down analysis, why top-down analysis is beneficial, and in what ways top-down analysis is beneficial to us long term. So guys, let's get into it on NZDJPY. So I basically just went onto a pair that I don't normally analyze so that we can do this from a non-biased perspective and just really go into the nature of the price action. And through the whole process that we will go through when we're doing top-down analysis on any chart. So guys, here on NZDJPY, we are on the daily chart. What we can see from a daily perspective is a market that has made a push to the upside and then has started correcting to the sideways. So we're expecting some type of an impulse correction, impulse continuation type nature from this market just because of the nature of this impulse and then the correction. Now, the reason why we use or why we employ top-down analysis from those higher time frames, and guys, mind you, this is tailored for someone that would be, for example, swing trading. Now, the reason why we start on the daily chart is because on the daily chart, guys, we want to establish a directional bias. So we want to know which direction we are trading, whether that's up or whether that's down. And once we find the momentum, always we want to be trading in the direction of the momentum that we do see on these higher time frames. So in this case, guys, we can see momentum coming to the upside and then this corrective structure over here, and we're expecting a continuation out of this corrective structure. Now, going into basically a process of breaking things down for you so that when you're doing this on your own, you can have something to remember, something to refer to. Always have a minimum of 3 time frames that you're going to do your top-down analysis through. We want to have a higher time frame, which we use for our directional bias. You want to have a middle time frame, which you use for structure, whether that structure is horizontal support and resistance or trend lines. And then you want to have a lower time frame that you use for your entry confirmations and your chart patterns. So with that being said, guys, we on the daily, we can see momentum going to the upside. We do see a corrective structure. So our directional bias in this case, guys, will be to the upside, hoping to trade in the direction of the momentum that we do see on our left hand side. Now let's go down onto our H4. Now on the H4, guys, what we will see or notice is that price is currently at some sort of a support. Now let me just I'd like to just remove this indicator. How do I do that now? Okay, let's just see if, oh, I can't go to object tree from here. Anyway, guys, we'll just leave this indicator on there. Anyway, getting into things, guys, we on the 4 hour, we can see that price is at or close to some sort of a support structure. What I will do is I will mark the lows of this corrective structure to find some sort of pattern that we can be trading. So we'd also put our resistance trend line up there. Now we know that this structure is within a range as long as we remain in between the support and the resistance trend lines that we've drawn. So going forward, guys, we are on our H4 and we are looking for our structure. So we also do see some previous support in these areas over here. So we're basically going to be looking for prices or for the market to tap and reverse, show us signs of reversal within this area so that we can be able to capitalize on the move in the direction that we're assuming the higher time frame momentum is. Now, once we have that through, I think let me just play this chart as well on the 4 hour just so that we can see if prices do tap into this area properly and do give us a nice confirmation. Let's play. There we go. There's a nice bullish engulfing candlestick, guys, on the H4. Now we could go down onto the H1 and then start to maybe observe all maybe mini inverse head and shoulders or whatever the case is. But just for the sake of this video and not to stretch it too long, guys, I'm going to just maybe stay on the H4. We're still going to go and explain what we are looking for on those smaller time frames, but the point was in this case that we use our H4 structure to kind of determine a point of interest where we expect the market to turn. Now going forward, okay, let's just drop down onto the H1. H1 will be our entry time frame, guys, and on our entry time frame we're looking for some confirmation. Now our confirmation could be this structure over here. Let's just draw in some structure for you. Wrong tool. Could be some structure over here that looks like this, some sort of an inverse happening on in these small regions here. Let's play this market and see if we do get a retest of the support structure. If we don't get a retest of the support structure, then I will just assume that we would have taken that entry anyway on that bullish engulfing candlestick on the H4. Okay, so I don't think we're going to get any retest, or maybe we might, but anyway, let's just go up to the H4, put on the position that we plan to take, and then kind of watch to see what happens, and then explain also. Once we've explained our entries, once we've explained our stops, then we will explain the real meat in why doing top-down analysis is actually important and why it's so beneficial to catch those higher time frame momentum moves. So we will put our stops below previous levels of structure over there, and then comes to targets. Now guys, for targets, we'll go back up to the daily and we'll set our targets based off I just want to open this up here. We'll set our targets based off higher time frame structure. Now that's why we do this top-down analysis based off higher time frame momentum and higher time frame structure, is because it gives us the opportunity to maximize on those winning trades. Look at the potential risk to reward ratio that we can be able to capitalize on here. Sorry, I'm just trying to open this a lot wider. I'm not sure where that bullish engulfing candlestick was, but I think it was somewhere there. Anyway, so the reason why we're doing this is because we're setting our targets based off higher time frame momentum. Now the final targets that I guess I would like to look at in terms of a higher time frame perspective would be these highs over here, and then I guess I would be using this to manage my second TP, and my first TP would obviously be at these previous highs over here. Let's just mark that out right there. So we'll manage our full position, look at the potential risk to reward potential on this trade. Now let's just go back to the H4, just refine our entry and stuff like that, because I know I moved it on those higher time frames just a bit. There we go. Our bullish engulfing candlestick was over there. Our stops are below previous structure. Perfect. So guys, we'll just continue, I guess, to play this market through and actually watch how the analysis really fares out. Are we trading in the direction of some momentum? Are we able to scale into those positions? And these are all the reasons why we actually do this higher time frame analysis, is because it allows us to maximize on our winning potential. We don't just want to be involved in those short-term moves, in those moves where they just give us a few pips. We want to be able to involve ourselves in moves that have higher time frame momentum. Now let's keep playing this chart. Oh, beautiful bullish engulfing to the top side. Guys, this is just already amazing. As much as we didn't get an opportunity to scale in, I was looking for an opportunity to scale in. I didn't want to rush this bullish engulfing candlestick up there. But guys, at this point, it's fair enough to say, safe enough to say that anyone that is normal would have already begun to trail their stops, maybe even there, maybe even to break even or something like that. So let's just also manage this trade the way we would have managed it in reality. So playing things a lot further, if we do, we get a violation of this trend line to the top. So that means our resistance trend line, guys, has been violated, has been broken. And I guess in terms of structural, the nature of this breakout might give us an opportunity to scale in if that's what this market is going to do, continue pushing to the upside. Let's just look for that opportunity to be able to scale in on this trade, because we are trading based off higher time frame momentum. Okay, now I wouldn't be too convinced to buy there. I'll hopefully wait for one more test down low. Okay, we're pushing down. We're getting that one more test down low. Now I would start looking for momentum shifts out of this market. Because yes, we could actually push back down to the bottom, but I guess now we would begin to look for some momentum shifts out of NZDJPY. Talking about this in real life. Okay, cool. That means our entry really was at this third push to the downside. Didn't really quite see something that I would have taken there. Anyway, guys, here's what it is. Let's just play the market, see if we get to our first TP based off higher time frame structure. And we'll also be able, or we'll go back and definitely check how much percentage or what is the risk to reward ratio. There we have hit our first take profit. So guys, already just off this trade, we have not closed the full trade yet. We have only hit our first TP. Let's go back up to that daily and let's look at the potential for that beautiful risk to reward. Now, as it stands, let's just do this. There we go. As it stands, where price is right now, we have already secured 5% of this position. Now 5% is literally someone's investment in the bank that they've left there the whole year. And just by waiting a couple of days following that daily momentum to the upside, holding this position, you are able to secure 5% using top-down analysis, obviously doing your analysis from the higher time frames all the way down to the lower time frames, and then taking your entries down on those smaller time frames so that you can minimize your stops, but extending your targets and taking targets based off higher time frame structure. Now we'll just continue to play this market. I really hope that this market actually does push to the upside and go through at least all three to take profits. I literally just went onto a random chart and just went back, so I'm not 100% sure what we're gonna do from here though. Anyway, guys, just to touch on, we did say that we're gonna go over not only why we use top-down analysis, but I guess I also would like to talk about the functionality of top-down analysis and how top-down analysis can really be part of your trading plan. It can be a process that you use when you approach the markets. Guys, we've already hit TP2. Let's see how much percent this is in terms of risk to reward ratio. That is sitting at 10% of your initial trade, and we'll push this back up to the top. Yes, guys, so I was saying that this can be a part of, oh, and there we go, we hit final take profits on this trade, guys. Now this obviously would have been a very beautiful trade. Maybe we would have managed this trade slightly differently in real life, but nonetheless, guys, the process is what I want to emphasize here. I want to emphasize that it is possible to maximize on those wins by doing top-down analysis, using your higher time frame areas for potential targets, and then refining your entries according to the lower time frames. Remember, we said we use our daily chart for finding a directional bias. We use the H4 chart for denoting and marking out our structure, our important points of interest, and then we use the 1 hour to find our chart patterns and also our candlestick confirmations. Now, yes, guys, what I was saying was that this can be part of your process, and that is the beauty of top-down analysis, is because the process is so simple that you can be able to do this over and over and over and over, and make sure that you're not making decisions based off emotion, but your decisions are based off a process that you've established, a process that functions on logic and not emotion. And so you'll be able to replicate your results. If your results are good, you'll be able to continue to replicate those results. If your results are bad, you'll be able to see which parts of the process do you need to change so that that changes your potential outcome or the results that this system that you have put in place is giving you. So guys, I hope that you actually enjoyed this video. I hope that this video was valuable. I hope that you did get something, just one thing, and that's all you need, guys. Anyways, definitely guys, if you did receive some sort of value, give this video a like. Also, if you do have some communities that you're in and you feel like someone needs to hear something about top-down analysis or the importance of top-down analysis, then definitely share this video to a friend that you feel like it will be beneficial to. Otherwise guys, I'm so glad that you guys watched till the end. This is Tremaine, and I'll see you guys in the future videos.